Muito bom dia a todas e a todos que nos acompanham no Congresso USP, na 21ª edição do International Accounting Conference, na 18ª edição do Congresso de Contabilidade e Iniciação Científica da Universidade de São Paulo. Sejam todas e todos muito bem-vindos a essa sala virtual. Nós estamos no segundo dia de atividades do Congresso e eu gostaria de agradecer novamente pela participação, pelo interesse e engajamento de todos e todas que participam aqui conosco. Eu gostaria originalmente também de agradecer aos nossos patrocinadores e apoiadores, a PwC, o Grupo Gen Atlas, a KPMG, o Concefaz e o Traders Club. Nessa manhã nós teremos a palestra do Mr. Ian Carruthers, denominada, intitulada IPSASB, Delivering Global Standards to Help Strengthen Public Financial Management. Hereafter, I will do the presentation of the presenters in English. And Ian Carruthers became chairman of the International Public Sector Accounting Standards Board, IPSASB, in January 2016, and has been a member of the board since 2010. As a member of the board, he leads the IPSASB work on long-term financial sustainability deadline in alignment between IPSAS and government financial statistics. After joining ATM Treasury from PricewaterhouseCoopers in 1999, Mr. Carruthers played a key role in the UK government's transition from cash budgeting to accrual and reporting, in particular leading its Rule of Government Accounts program. He joined CIPFA in 2006, promotes and supports improvements in the management and governance of public finance in all public services around the world, and sets financial management and reporting standards for local in the UK. As part-time president, CIPFA standards, Mr. Carruthers' role encompasses all these aspects of the Institute's activities, and he had to lead his work in the role of CFO of public services, as well in developing the international framework for good governance in the sector public with IFAC. To moderate this presentation, we invited the Professor Patrícia Varella, and Professor Patrícia Varella is currently a researcher and professor at the University of São Paulo in the School of Economic Business and Accounting. She is the leader of the Research Group Center of Studies in Accounting Government. Professor Varella was appointed as a member of the International Public Sector Accounting Standards Board in January 2020. Professor Varella also performs the role of standard setter as a member of both advisory group for the Brazilian Account Standards for the Public Sector Accounting of the Federal Accounting Council and the Technical Committee linked to the National Treasury. Professor Ian and Professor Patrícia, the floor is yours.
Thank you, Eduardo. Please, Ian, the floor is yours.
Okay, thank you. So I will just share my screen and make sure that we're okay. So if I can just check we're okay, you can see my screen?
Yes, yes, it's okay.
So thank you very much. Bom dia. Hello. I'm very pleased to be able to join you today. I understand you're having a very successful, very busy conference, and I hope that this presentation gives you a lot to think about and to discuss, and certainly happy to take questions at the end of my presentation. What I'm going to talk to you today about is the International Public Sector Accounting Standards Board, which, as you've heard, I'm currently chair of, delivering global standards to help strengthen public financial management. And the reason for the very nice picture of Toronto in front of you is that that is actually the home of the IPSASB. Although at the moment, obviously, since March 2020, we've been unable to meet physically, but we have continued to meet virtually. So what I'm going to talk to you about today is just to give you an introduction to the board. I want then to talk a little bit about public financial management, to give you a perspective on that, based on a definition and a model that I worked on was in my time at the Chartered Institute of Public Finance and Accountancy, SIPFA. Then I'll talk to you about IPSASB's strategy, which is linked to strengthening public financial management and how we go about our standard setting process. talk to you about some of the challenges that we have at the moment in terms of some of the key projects, which illustrate the sort of challenges that we're trying to address. Talk to you then about what's going on globally in terms of trends in public sector reporting, particularly uptake of accrual and IPSAS, and then talk to you about what is a very current situation, which is the work programme consultation that we are due to publish most likely tomorrow, although just possibly later on today. So that's very much bringing the picture right up to date. So introducing the board. So we set financial reporting standards for the public sector, and we're the only global board that does that. At the moment, our suite comprises 37 accrual basis IPSAS, but we also have the cash basis IPSAS, which is used in a number of jurisdictions around the world. As you'll hear in a moment, we have a conceptual framework developed for the public sector, which supports us in our work, and we draw on the commercial international financial reporting standards where that's appropriate for the public sector, but we also consider statistical reporting, and that is very important in the context of public financial management. Our activities are overseen by the Public Interest Committee, which comprises representatives from World Bank, IMF, OECD, and also the International Organization of Supreme Audit Institutions. So international organizations active in the PFM arena who hold us to account in terms of whether we have followed our due process. We also have a consultative advisory group made up of 26 members from around the world, but also from a variety of backgrounds, who can discuss the bigger picture aspects of our work, and they give us some very valuable advice. For example, we have members of that from who come from the parliamentary backgrounds, but also academic and so on. In terms of the board itself, I am the first paid chair for the board. All the other board members are volunteers, and they come from a variety of backgrounds. We have certainly academics, such as Professor Patrícia Varella from Brazil, as you know, but also from ministries of finance, from public sector standard setters, and from supreme audit institutions. And to show you that we are actual people, those are the board members for the IPSASB for 2021. Members serve for a maximum of 2 3-year terms, and you can see that we have a very good spread geographically. 2021 was also the first year that we were a gender balanced board, and you'll see that we have representation from Latin America. Patricia is obviously from Brazil, but we also have a Spanish-speaking board member from Panama. So I think a good spread of the those using the standards and those familiar with the standards around the world. So if I just talk for a short while about public financial management, and I won't dwell on this definition, but I thought that it was probably useful just to give you a reference in terms of the discussion. So the definition that is in the SIP for whole system approach to public financial management is that PFM is a system. It's concerned with financial resources, how those are planned, directed, and controlled. So this isn't just about budgets, it's about management during the year of the finances to enable and influence efficient and effective achievement. So it's not just spending money, it's how money is spent, and it links to public service outcomes. So it's what is the government or the public sector entity looking to achieve in terms of the broader impact on society. The idea is this framework can actually work at all levels. So if you think about in Brazil, the federal government, the states, but also at the entity levels. It was developed as a result of SIPFA's international activities and experiences. And it very much is about a system. So it recognizes that there are controls within any system and that they need to operate together. So it complements as well other assessment tools like the Public Expenditure Financial Accountability Framework, the PIFA framework, but also the IMF tools and so on, and it is mapped against those. And the idea is that it doesn't just work fixing one part of the system, for example, improving budgetary processes. You need to take the system as a whole, and that statement at the bottom that whole system is greater than the sum of the parts because they all operate together rather than individually. So just walking you through that quite complex diagram on the right, at the center we have accrual-based information, and the fundamental idea there is that in order to be able to manage public finances well, you really need to understand the economic substance of transactions that governments enter into. We know that in the public sector, politicians are very good at making promises. They're very good at introducing new schemes, where the cash flows may actually be a number of years in advance. But you know, it's only through managing reporting on an accrual basis that you really have accountability and that you have high quality decision making. Moving then to the green areas, the idea is that there are key elements within a framework which are external to the organisations, to the government, to the individual entities. So the legislative framework within which public financial management operates is very important, so that there is a clear framework that actually has legal force. The standards that are used, so the idea being that rules and guidance are not just made up by individual entities or by the government, that they are actually set within a clear framework. And we believe at IPSASB that those should be international standards because you require comparability in terms of achieving credibility internationally. You need to be transparent, so there need to be clear frameworks for the way in which budget documents are published, financial reports are published on a regular basis within a regular framework, and that those need to be scrutinised by external auditors from an independent supreme audit institution. So those are the external elements. Within the organisation, it needs clear processes for managing finances, so how the finances are planned, both for the current year, the next year, a number of years in advance. How those plans, the budget, is translated into action, that is monitored, and then that there are clear processes put in place within the organisation to report to the various different stakeholders on both the finances and performance. The framework fits with the ideas developed for integrated reporting. Of course, broader financial reporting is very much in our minds at the moment in terms of developments around sustainability reporting, and I'll talk a bit more at the end of my talk about that. But the idea is that this is consistent, this model is consistent with managing not only the financial capitals or resources, but also the other 5 capitals or resources in the integrated reporting framework: natural resources, infrastructure, how it uses the intellectual capital, and how the relationships with other organisations and staff are developed. Very importantly, though, this is all set in the context of good governance. So strong public financial management is integral to good governance. Good governance requires strong public financial management. The two are indivisible. And the idea, which is the black cogs around the outside, is that those actually in this model very strongly interrelates with the principles of good governance in the public sector, the international framework that was referred to in the introduction, which was developed between SIPFA and IFAC. And the overriding principle there is acting in the public interest. That was one of the things that the group that developed the framework saw as really the defining factor that differentiated good governance in the public sector from private sector frameworks. The second principle there, that you're focusing on outcomes and that those are sustainable in economic, social and environmental terms. And I think in this, when we published it in 2014, this was probably ahead of the time at that stage, but I think this is now incredibly relevant in terms of the challenges that people are facing nowadays with addressing climate change and also delivering on the Sustainable Development Goals. The idea is that you work out what the organisation needs to do to deliver on its outcomes rather than fitting the outcomes to the organisation, and that you then need to work out what does the organisation then need to deliver, and that may be by buying services in, it may be by developing staff, and the idea that this is the whole organisation. It's not just a finance thing, either in terms of public financial management or strong governance. Now, if you want to have a look further at the ideas behind this model, I've given you a link there. It's to the online version, Delivering Excellent Public Finance. And in that, you'll get some introduction to each of the elements. You can read further on that. There are also linkages to the other relevant frameworks. So I would commend that if you are actually interested in exploring more around any of those elements that I've talked about in terms of public financial management. So that's this section on discussion of public financial management. What I want to do now is to move on to the work of the International Public Sector Accounting Standards Board, and to present to you our strategy for the 5-year period 2019 to 2023. We are more or less exactly midway through that strategy at the moment, and as you can see at the top, it actually is our standard setting work, and all the board's work is linked into the overarching aim of strengthening public financial management. And again, that fits very much with that model that I've just shown you. Within the strategy, we have two main areas of activity: setting standards, delivering global standards, and also then inspiring implementation. Now, the majority of this talk will be on delivering global standards, but I just wanted to talk for a moment about inspiring implementation. Now, the work in this area actually falls into two areas. One is at a jurisdiction level, it's about the implementation of standards. And the second area is actually promoting an integrated approach to the use of information. And you know, it's thinking about what this diagram shows is if you look at there are a number of users of information produced by public sector. So the most obvious external user is the legislature in terms of accountability for how tax revenues and budgets have been used on behalf of civil society users, but also increasingly where governments are borrowing on the markets, you have accountability there, and also to international organisations and regional organisations preparing statistics and comparing governments, so organisations like IMF, for example. And the view here is that if you look in that centre circle, accrual information actually can be used not just for accounting purposes, it can be used to improve the quality of government finance statistics, and then it can be used both for budgeting and macroeconomic planning purposes. And really the aim is actually to make the accrual information which is produced through the accounts as useful as possible, so to expand that centre-wide circle into those other areas. And I think, again, you know, the more that the common data set is used, the stronger public financial management and governance can be, where you get a lot of different conflicts between the frameworks, different sources of information and so on. There is a lack of clarity both for decision making and for accountability. So moving then on to the approach to standard setting that the IPSASB takes with that public financial management lens in mind, one of the fundamental document is our conceptual framework. This is a framework for the public sector, although it does draw on ideas in the International Accounting Standards Board's framework. Where it is appropriate for the public sector, we have used those, but we've also interpreted and provided our own guidance. And when you look at it, it really is the philosophy of reporting and for the public sector, particularly moving down to the 4th and 5th lines and onwards. It gives you guidance on what entities should report, what the elements are in financial statements, and particularly important definitions of assets and in particular liabilities. And that's giving us quite a headache at the moment in terms of how that works in relation to revenue recognition. And then also how you measure assets and liabilities, where we have a consultation out changing the approach to that to bring in the concept of fair value, and then how you present and disclose. So it's a very comprehensive framework, but it also sets the frame of reference for our standard setting. And we do use this, and we are actively using the framework for all our projects. We also, as I mentioned, we do make use of international financial reporting standards. We have a clear process for doing that. The overarching view is that where a transaction is the same as or similar to the private sector, then you can use the guidance that the IASB has produced as a basis. If we do that, we then follow this flowchart to say, are there areas where we should depart? If not, we will maybe make terminology changes for the public sector to produce the document. And our standard IPSAS 39 on employee benefits is a clear example of that, very closely aligned with the underlying IFRS. If there are reasons for taking a different approach in the public sector, then we may actually initiate a separate public sector project. And the classic examples here would be in respect of non-exchange revenue, IPSAS 23, and also IPSAS 42 on social benefits. If we can use the IASB's material as a basis, we may well depart from that, and we may well modify it. And so that's the middle course. And you can see a number of examples of that in our literature, whether fully or partially based on IFRS standards. So, for example, sort of IPSAS 40 on public sector combinations and so on. So there's examples of how we use these in practice across our suite. We also pay attention to government finance statistics, and the idea is there that, again, if you can use, it's back to that diagram that I showed you, that government finance statistics are used very commonly for economic analysis, particularly on the macroeconomic side, but also for budgeting. So in terms of quality of data for decision making, there shouldn't be unnecessary differences between the GFRS framework and IPSAS. There may be a need for differences between the frameworks. For example, government finance statistics doesn't really recognise the concept of provisions at the moment, and there are some differences around recognition of impairments to financial instruments as examples, and no recognition of pension entitlements to current and former employees. But where we can use the same guidance for both IPSAS and it's consistent with GFS, then we will do that. Now we have a process for that, similar to the IFRS one that I showed you. This is very important at the moment because there is an update going on over the next 5 years of the International Statistical Standards Framework within which the GFS manual sits. And we are playing a full part in that with a view to trying to reduce some of the differences and get increased alignment by getting changes within the GFS framework, although there may be some consequential changes as well for the IPSAS framework. So we have an open mind on that. We're engaging very actively in the debates on that, and we will see where that gets us to. So moving then into the breaking down the delivering global standards part of our activities, we have 3 themes under that: setting standards on public sector specific issues, maintaining alignment with IFRS, and then theme C, developing guidance to meet users' broader financial reporting needs. In the 2019 to 2023 strategy, we added a couple of new projects to our work on public sector specific issues, in particular natural resources, very relevant, of course, to many countries in Latin America, Africa and Asia. And there was a lot of very strong support for that. And we're expecting to produce a consultation paper on that at the end of the first quarter next year. We're doing some limited scope updates on our conceptual framework. I mentioned reviewing the definition of liabilities and assets, partly prompted by the completion of the ISB's framework update in 2018. That was after we approved our framework in 2014. Then under the IFRS alignment area, we do annual improvements. So you'll shortly see the 2021 annual improvements proposed being published. And also we will undertake limited scope alignment projects. We have the ED on the proposed guidance on assets available for sale and discontinued operations. That's ED 79 out at the moment, but also we're working now using IS 26 retirement benefit plans, accounting and financial reporting for those as the basis for a public sector standard. In terms of theme C, we didn't propose any work at that stage in 2019. This, of course, has become much more important now with the advent of the debate about sustainability reporting. And so, you know, we're proposing to be more active in that space, as I'll explain later. We also initiated a research program for the first time, and we took forward 4 topics, you know, overseen by an academic advisory group, of which Professor Varella is one of the members. That was chaired by my predecessor, Andreas Bergen from the Zurich University of Applied Sciences. And we undertook that as we completed projects that were ongoing at the start of the programme, that we would undertake a mid-period review. And that is what we will be publishing either later today or tomorrow.
Ian,
yep.
Please, could you speak more slowly?
Okay.
Yeah. Thank you. Okay. Thank you.
So the work programme as it stands at the moment is there. You can see the range of projects. You can see that we have almost all the projects are public sector specific. Perhaps the only exception would be that ED 79 assets held for sale and discontinued operations, where essentially it's an aligned project with the relevant IFRS 5. But what we do in taking forward our standards work is actually, whilst focusing on the public sector, to pick up the relevant changes in guidance. And so if you look down that list, you'll see that we're picking up the ISB's new revenue standard, IFRS 15. We are picking up the leases standard, IFRS 16, and we're also incorporating the guidance on fair value from IFRS 13. And that is a theme throughout our work, is balancing these various different guidance sources. So I just want to show the challenges that throws up in terms of 3 of our current projects. So if I talk firstly about revenue, this is complex because we are trying to update an existing revenue standard. So we had exposure draft 70 out for comment last year, which we called revenue with performance obligations. We were also updating an existing public sector standard to fit with that. So exposure draft 71 was an update of IPSASB 23. And then we're also trying to produce guidance for the first time, which is specific to the public sector, on the opposite side of revenue, where organisations provide grants and other forms of transfer, which we group together as transfer expenses to other parts of the public sector. So that was new public sector guidance, and that shows you the challenges that we face in making an integrated approach to guidance going forwards. Just a flavour of the kinds of issues that's throwing up, and in responding to the more than 200 responses that we had to those 3 exposure drafts together. And we were very pleased with that, including, I would say, one of the features of our work over the last few years has been we're getting extremely strong engagement from the countries in Latin America who are increasingly using IPSASB. I know Brazil is doing that at the moment, and we are very grateful for that input, because if we don't get comments and input from people who are going to use the standards, we can't do our work as well as we would like. So in looking at the revenue side of the comments, we made a decision that the ordering of the standards was not right, that the majority of revenue would fall to be accounted under a standard based on ED 71, so that should be the first standard. Sounds perhaps obvious, but I think that's quite important in terms of how the guidance eventually works. I've referred to the fact that we do have the issue about linking to the conceptual framework and some issues with how the liability definition is not really working properly in practice at the moment. So we are moving the limited scope update of the framework alongside finalising the revenue standards, and then various aspects of the guidance within there, this idea about binding arrangements, a public sector context which builds off the idea about contracts, and how we take that forward. So a lot of work going on there in terms of revenue, but I think that gives you an insight into the challenges that we face. Leases, another very tricky issue. ISB issued its new standard on leases, IFRS 16. The problem is, though, that IFRS 16 is not a coherent solution to the issue. It includes a right of use approach to lessee accounting, but it still maintains the previous risks and rewards approach for lessor accounting. And that certainly is a challenge for the public sector, where you quite often have both sides of the transaction within the public sector. And we put out one exposure draft 64, which proposed to depart from the ISB's approach for lessor accounting. That didn't receive universal support, so we reconsidered, and in March in 2020 we looked at this strategic analysis, if you like. First option being, don't change the existing guidance, don't pick up the ISB's new guidance. At the other end of the spectrum, take forward the coherent integrated model that we proposed in ED 64, or take a more sort of partial approach, which is to change lessee accounting, which is the approach broadly that IFRS 16 took. And it was that approach that we have just finished consulting on. In looking at the which way to go, we had a number of conflicting factors. So there was a clear benefit to moving to the right of use approach rather than risk and reward approach, which was susceptible to manipulation. If you change an accounting treatment, then there are costs involved in doing that. GFS guidance was reasonably consistent with the existing approach. So if you move away from that, that doesn't help that. But on the other hand, the existing approach wasn't aligned with our conceptual framework. It wasn't aligned with IFRS. And then there's a question about feasibility of delivering the whole project from the IPSASB point of view. And as you can see, not a clear-cut decision, but that's overall, on balance, the board decided to move forward with option 2. And at the beginning of this year, we published an exposure draft on that. We also proposed splitting the project and picking up some of the more difficult issues for the public sector related to leases, like concessionary leases, as a separate phase. And we issued a new type of document for us, the request for information, to understand the issues further in designing that guidance. And that may form additional guidance to the new leases standard, or it may be separate guidance. We have an open mind on that at the moment. Comments closed in May, and the board had a first discussion about that a couple of weeks back, which you can listen to on the YouTube channel. You can see the board papers on our website. The board has decided to proceed with the approach in ED64 that we will move forward with a new leases standard based on IFRS 16. So that's that middle approach in that previous slide. And we're expecting that we will work our way through that, and that the new standard should be approved somewhere in the middle of next year by the time we've worked through all the various different comments. Moving on then to 4 exposure drafts, which are all interconnected, which we have out at the moment. So I mentioned challenges with the conceptual framework. We didn't really include the concept of fair value in that guidance. And also, there are a lot of different ideas around measurement, different techniques and so on, which we felt needed to be drawn together. So we have proposed a new standard on measurement, which brings together the guidance on that in one place. That has an impact on existing standards, in particular our property, plant and equipment standards. Some of the guidance in the current IPSAS 17 will move into that new standard. We have also taken the opportunity to provide guidance on particularly difficult types of assets in the public sector. So heritage and infrastructure, we describe the characteristics of those types of assets that give rise to problems in terms of collecting information and financial reporting. There's implementation guidance provided on those. And then finally, that 4th standard on non-current assets held for sale and discontinued operations. So that's a gap in our suite of standards, and we decided that we could fill that gap by bringing in an aligned piece of guidance based on the relevant IFRS. There's also a lot of consequential amendments to other guidance arising as a result of that, because measurement obviously is very prevalent. Just very quickly, some of the key features. So bringing in fair value, but we recognise that this is not appropriate in a lot of cases. If you want a current value rather than historical cost, you may want a current value for things like schools, roads, and so on. So we have this new idea about current operating value, and then application guidance on various different aspects. Probably one of the key features, though, is this codification of how you approach measurement subsequent to initial recognition, and the idea that you can take a current value approach as required by government finance statistics as an alternative to just remaining on historical cost. And then we describe the different bases that would help you, different approaches to reporting on current value, and the individual techniques that you can adopt for deriving a current value. Some disagreement about that, so we have an alternative view on what we call the income approach under current operational value. So that's alternative proposals from a couple of the board members on that. So then moving on to what's actually going on around the world at the moment. This is where in June, CIPFA and IFAC published an update on the International Public Sector Financial Accountability Index. The original index was published in 2018, giving data from 150 jurisdictions. We've now upped that to 165 jurisdictions. So it gives you the basis of reporting in 2020, forecasts where the jurisdiction will be in 2025, and then some further projections going forwards to 2030. It picks up the basis of reporting, so cash, partial accrual or accrual, and also the type of reporting framework that is being used, and in particular whether international public sector accounting standards are being used. That will be complemented by a new document or a new web-based tool called Pathways to Accrual, which is an adoption and implementation tool being produced by IFAC and CIPFA, and that's due to be published later on in the year. So looking at the picture in 2020, that's the picture overall in terms of basis of reporting, with a third of countries, more or less 30% on accrual, 30% on cash, 40% somewhere in between partial accrual. That may mean that they're moving towards accrual, or it may mean that they have elements of accrual in their existing framework and are not reforming. But you can see that certainly position beginning to look quite good in Latin America, a lot of activity going on around the world. We unfortunately at the moment have less information on Africa and Middle East, and that's an area where we want to improve in future years. And that's an increase of 6% from 24% on accrual in 2018. Moving forward, the reporting frameworks that are there for the 49 countries on accrual at the moment. Some use IPSAS directly, some modify IPSAS for the context. Some use national standards with reference to IPSAS. I think that's effectively where Brazil is at the moment. And then we have 3 jurisdictions using IFRS as a basis. And then we have some on national standards other, and for example, the US Governmental Accounting Standards Board standards are used in a number of jurisdictions, and that's reflected in that number of 18. And the standards are used directly by a lot of international organizations, as you can see, including the 26 UN system organizations. That's organizations like the World Health Organization, UN Development Programme, UNESCO, and so on. So the trends going forwards. In 2025, the number of jurisdictions using accrual as the reporting basis is forecast to be 50%. And that's forecast to move up to almost 70%, projected to move up to almost 70% in 2030. So a very strong trend upwards in terms of use of accrual going on. Similarly, the use of IPSAS in frameworks will increase during that period. So you can see that's the position as it is in 2020. That's what the position will be in 2025. So you have more jurisdictions on accrual and more of them using IPSAS directly and indirectly, and also more using IPSAS to develop their own standards. And then that picture increases again to the 120 projected for 2030, again more using IPSAS directly and indirectly. So the influence and usage of IPSAS growing over that period. So moving into the final section of the talk, where do we go in the future in terms of responding to the needs of those using our standards going forwards? And as I said, this work plan consultation is due to be published either later on today or possibly tomorrow. We're in the very final stages of getting it ready for publication. Just talking about some of the context, I've referred all the way through to the degree to which the guidance is public sector specific, and that's the picture as it was last autumn, with around a third of our guidance wholly or mainly public sector specific. That will change, that will increase to around 40% by the end of next year, with the standards coming off the production line as I showed you going back earlier in the talk. What will change significantly is the degree of alignment, and that's shown here. So red is where we're on an out-of-date version of the standard, green is where we are on a current version of the IFRS, and we've picked up all relevant annual improvements and so on. So again, that was the picture as it was last autumn. Looking forward to the end of 2022, a very significant change, and that's as we pick up those big changes in revenue and leases, and also bringing in fair value. Looking at our work programme, that's what it looks like at the moment. And as you can see, we have a gap opening up later on next year and into 2023. And that's what we want to consult on now. Which new projects should we pick up for the remainder of the strategy period? Projects won't be completed by then, but it will take forward key issues. And we have to weigh a lot of different factors. So public sector specific at the top, how does IFRS come into our suite? This is getting towards the end of what I've called the hump, those big new standards issued by ISB a few years ago. We will have worked through that in terms of applying those in the public sector context, also picking up the changes in the International Statistical Standards Framework. And then in terms of the type of guidance, a debate always, principles versus more detailed guidance in rules, concepts versus what works in practice, and also completeness of suite. And that's a lot of different factors, which is why you have that Rubik's Cube. Going back to the board members all have their own views on where we should put the priorities within that. And then we recognise that you, our constituents, will have your views on how this works. So where have we landed in our proposals? Well, we've split between big projects, major projects that will require the sort of 5 to 6 year development process through a consultation paper, an exposure draft, and then to the final pronouncement. We think it's now overdue that we revisit the guidance on primary financial statements, particularly in the context of other comprehensive income, which we don't have at the moment, also making the performance statements easier to use if you're reporting on a budgetary basis and things like that. We're proposing a project on what we call differential reporting. So should we have an IPSAS equivalent of the IFRS for SMEs standard? And then we have a number of minor projects, some of which are improvements to our existing guidance, and also, but again, very much concentrated on making our existing suite coherent and making it useful for people picking up the standards. And we will also pick up guidance changes from the International Statistical Standards. I couldn't leave this talk without mentioning sustainability reporting, incredibly active at the moment. Because of the amount of activity going on and the proposed formation of the new International Sustainability Standards Board, we're not proposing to develop our own guidance at the moment. There are already a lot of different forms of guidance out there, but we are participating in the discussions around the formation of the new board. We're also participating in discussions on the topic in the International Statistical Standards Update, and we will be going live at the same time as we publish our proposals on the consultation, work plan consultation. So later today, tomorrow, you'll see a new page on the IPSASB website on sustainability reporting, giving access to the various reports available, various different frameworks and so on. And we will also keep that live. So as guidance emerges, we will make sure, and experience emerges, we will make sure that that's made available to constituents. And really the message is climate change, delivery of the Sustainable Development Goals are crucial. They're urgent. You need to start now because they involve significant programs of work. You don't need to wait for the perfect reporting framework. You need to get the programs in place, and then the reporting can follow on from that. And that's very much the theme of an article that I published yesterday. So in terms of the mid-period work programme, we're now at the stage where we're publishing. We will be holding roundtables. We hope through the FOCAL network, we will be having a roundtable in Latin America during the autumn. And we will also be doing regional roundtables in Africa and Asia. And we're intending to do one with national public sector standard setters as well. So we get plenty of input to the decisions that the board will take during the first quarter of next year on which projects to add during late 2022 and 2023. So that's the end of my presentation. Giving you links there to the IPSASB guidance and website. Thank you very much for listening. And at this stage, I'm very happy to take questions on any aspects of our work. So at that point, I will stop sharing my screen and I will pass back to you, Patricia, because I know you've been monitoring the chat whilst I've been talking.
Yes, thank you, Ian. Thank you very much for your very informative and engaging words. And yeah, you have an essential and talented role in the IPSASB, and for one, I'd like to thank you very much for the kindness and wisdom with which you fulfill your role. I very much appreciate working with you. Now, I would like to ask some questions on behalf of the participants. The first question is from Mayara. Mayara says, among the main benefits of adopting IPSAS is the information comparability. Considering that the adoption can be done directly, indirectly, or using IPSAS as a reference point, do you consider that comparability will be achieved at some point? If so, in which way?
So thank you for the question. I think that is a very important point. The IPSAS themselves do offer choices of treatment within the standard, so even if you adopt directly, there are still some choices, principally, I would say, on assets between current value approach and historical cost approach. That said, you will increase the amount of comparability by directly adopting IPSAS. The more that you make changes to those, the more that impacts on comparability. At the moment, I think the emphasis has to be on moving governments towards accrual and getting the systems and processes in place to do that. Then I think will follow a pressure to gradually increase compliance with IPSAS. And in particular, I think that will come from international organizations, and also as the the markets pick up on the fact that there is good information on government finances through published accrual information. I think that will increase the pressure, as it has in the private sector, to use the international standards. But it's at the moment, I think the real goal is to get the transition from cash or partial accrual to full accrual. Then I think comparability will follow on later. And just to share the experience from the UK, once you're on accrual, when we transition from UK GAAP to international standards in the public sector, we did that without any qualifications on the audit reports for any public sector body. When we initially implemented accrual reporting in central government, 2/3 of the government departments had qualified audit reports to begin with. So the real challenge is to get onto accrual. Once you're on accrual, I think that makes the final transition to international standards easier. It's not to say there aren't changes, but the real battle is to get to accrual in the first place.
Okay, thank you, Ian. In fact, the comparabilities are so challenging, not only in the central, but in the other levels of government too. The next question is from Ricardo, Professor Ricardo. I use the question here. Ricardo, you'd like to know more about two potential projects, differential report and tax expenditure, because they are very relevant to Brazil. Could you give us some details about these two projects?
So, yes, I think they are very important projects. At the moment, actually, we don't have a detailed project brief for each project. We have an outline, which if you have a look at the consultation paper when it comes out, that gives a summary of the sorts of issues that we think we would address. But we will be guided by input from, for example, in both cases, we have input already from the academic community through the research program, but we will also want to hear from our constituents about what they think we should do. And then when we design the project briefs, we will actually discuss the drafts with the public sector standard setters. So we have a forum planned for autumn next year when we'll discuss the design of those. So differential reporting is quite tricky in terms of how would you decide what a smaller public sector body is, given that all use public resources in some way, and also what should they not do? You know, is it just relief in terms of disclosure, or is it you don't need to recognize certain things? You can measure on a more simplified basis and so on. So there's a lot of choices there. And similarly, I think if you look at the recognition in financial statements, there's a lot of choices there about how you might take that forward. So in both cases, we will have all of that input to the design of the project, and then it will be debated and discussed in the board, and both will have consultation papers, again, so that we can discuss those with constituents before we actually start developing the draft guidance in the form of the exposure draft, and we'll get input to that before we move to a final standard. So a lot of opportunity for debate and discussion, and we really welcome that because I think both are really important developments.
Yes, yeah, thank you. Yes, I'd like to invite the participants to give IPSASB members inputs about the two projects. Mm-hmm. The other question here is from Professor Ludmila. Professor Ludmila would like to know about the assets held for operational capacity. In particular, what are the main challenges that public accountants from emerging countries like Brazil report ask to IPSASB about the service potential measurement? Yes, service potential measurement is so yes.
As you know, Patricia, we've had a lot of very lively debates within the board about that. Yeah. I think the issue is over the fundamental choice you have is whether you account for those assets that you're not holding for investment purposes on a current value basis or on a historical cost basis. And to some extent, that choice is a practical choice because in many cases, if governments move to accrual, they don't have good historical information on particularly things like roads, rail, infrastructure assets, heritage items, but also schools, hospitals, and so on. And so therefore, that's where current value becomes a more potentially more useful, and it provides you some comparability as well between those assets. And then the challenge becomes, well, okay, if you do that, fair value, i.e. a market value, is not appropriate because they're not held for you know, the ability to provide cash flows. They're held because they can provide services. And then the question becomes, how do you actually do that? And that's where you have you know, you may have some market information. You might look at the cost as in depreciated replacement cost. What would it cost to replace that asset? If you do, how do you do that? How do you approach the valuation of the site, for example, that the asset is on? That caused a lot of debate in the board. Or if you're looking at social housing, is it a valid approach to value that on the basis of that reduced income stream that you receive from the housing stock? So those are the sorts of issues that are described, and I think I would certainly advocate that you have a look at that draft guidance, because personally, I think, having worked in the area for so long, this is a really important piece of guidance. And there are a lot of challenges there, and there is plenty of debate and discussion that's already happened, and we would certainly value your input you know, to the exposure draft, so that we can use that as we finish the debates off and we come to a final standard.
Yes, I think it's a critical point in this post draft about the measurement, and you will be so happy receive some comments about this point. Now I'm as a IPSASB member here. I ask as an IPSASB member. Yeah. Okay, the next question is from Professor Claudia. Professor Claudia is a coordinator of the public sector account scene in this conference. She would like to know about the alignment with IFRS standards. Claudia says, we know that the purpose of account is providing users with useful information. Private companies and government entities have different objectives and users. Our concern is to adopt a model configured for economic and financial return in entities with a public and social purpose. I'd like to hear your opinion about this aspect.
So I think, you know, it's a very important
okay.
It's actually quite hard to be categoric about where it's appropriate to use the same guidance as in the private sector for the public sector. It's fairly easy at the extreme end. So, you know, for example, if the public sector employs staff, that's the same transaction as in the private sector. Where it provides benefits or it collects taxes, again, that's a relatively easy issue. It's the things in the middle which actually provide the most discussion and debate within the board, I think it's fair to say. And I think what we're always trying to do is to arrive at guidance that actually, as you say, helps governments be accountable for their activities as public sector activities. So whatever the government is doing with the assets, whatever services is providing, that we try and report the economic substance of those transactions. And it is a very grey zone in the middle as to, you know, can you just apply guidance directly? Do you need to give more supporting guidance? Do you need to change the approach? But personally, I'm always looking at it as from the perspective of having worked in the public sector and having, you know, worked particularly in the UK's Ministry of Finance for 10 years. And I'm thinking about it in terms of, if I was discussing with budget colleagues, if I was discussing with the macroeconomists, how would they think about this? How would they approach it? What makes sense in that context? And I think that's what the board does very well. We really don't come at it from you must use the IFRS. We come at it from the what makes the most sense in terms of accountability, transparency, and information for decision purposes in the public sector. And, you know, that's always what we want comments on. If we haven't achieved the right balance, that's where we, you know, we need comments from the constituents to tell us that we've not quite got the balance right for the following reasons, and then we can adjust it.
Okay, thank you, Ian. We have more questions, but we don't have more time, unfortunately. Thank you, everyone, for the interesting discussion. On behalf of conference organizers, I'd like to thank you, Ian, for sharing your knowledge with us today. It was an honor for us. I look forward to seeing you in person in future editions of the conference or other events in the Brazil. Thank you so much.
Thank you very much. And I've enjoyed today, and likewise, I've enjoyed the previous visits that I've made to Brazil, and I very much hope to be able to join you in person in future years. So thank you very much, everyone, and I wish you all the best for the rest of the event. Thank you very much.
Thank you. Bye-bye.
Bye-bye.